information presented on Sky News Real Estate is general in nature. Viewers should seek their own professional advice before purchasing products or services. Sky News Real Estate may receive a fee for commercial arrangements with companies featured in this programming. This is Sky News Real Estate. Smart investing.
Hello and welcome to Smart Investing. I'm Chris Gray. On tonight's show, with lots of debate over which way the property market is heading, should you be choosing houses, units, commercial real estate or something else? Is the economist who shouts the loudest with the biggest claims the one to listen to, or the quietest one who says that things are looking okay? And how do you sell your property the quickest for top dollar? Well, joining us on the show tonight is News Corp real estate expert Tom Panos and Charles Tarbey, chairman and owner of Century 21 Australasia. Welcome to the show, guys. Tom, let's start with you. Let's a bit of a mixed market. So what's your kind of top tip for those investors out there at the moment?
I would probably say the first thing is financing. Don't go in there with the assumption that even if you're the sort of person that thinks I've got heaps of equity, cash flow is not a problem, if you're the kind of person, Chris, that's always thought that the banking and the financing side is going to be easily looked after, I'd say get it in writing, because I've heard of plenty of instances, and you may have well as Charles, where people think that they've got a certain amount of funds approved, and when they go to do the deal, they find that the bank's sort of saying, hey, yeah, should be okay, well, you know, we need to check a few more things, and then they've done the deal and they find that they might be 100 or 200 grand short in funds.
There's two things that are impacting it, of course, the pressure on banks with investors, but also they're pushing right towards the end before settlement for valuations. They're leaving it closer and closer to the end, so your contract price, which was always normally enough, may not be enough this time around.
Yeah.
And from both of your perspectives, being in real estate, it's not a case of just losing your deposit, which is bad enough. It's potentially losing the loss of the property if they don't sell it for. If you've paid over the odds, and it's gone, they can only sell it for, say, 20% of the value. You lose 10% plus whatever loss.
And that has happened, yes, you do. You lose the loss plus whatever costs associated with it. And they can go on and sell it for the full price they sold it to you for, if they're lucky. If they're lucky at a later date. But if you can't complete and it gets revalued and it revalues at a lower price, yeah, you can cop the difference for sure.
So there's a lot of brokers out there saying get a plan B. It's actually almost get pre-approved twice.
Yeah, well, I think that's good advice. I wouldn't have thought that would have been necessary a few years ago, but right now there's just too many instances where people, even that they've had a relationship with a bank that may have gone for decades, they're finding that not necessarily is going to be the answer to their problems. So I would say that would be good to have a plan B. I mean, the consequences of being left at the last minute running around, in Charles's instance where he's talking about valuations happening at the last minute, I mean, you're really cornered. I mean, how can you pick up the phone with a week to settlement to another bank, say, hey, my name's Tom Panos, I know that we don't do business with you, but this is a situation that I'm in.
And I'm desperate and I need it done within a week.
Correct.
Yeah, and that's where you find the wrong money then, and that the interest rates are a lot different, therefore your costs to keep the property is going to be a lot different as well. This is really strange because we're talking, I know I like this way of telling people to watch out. I mean, a lot of the industries that we're associated with will tell people, get out, buy, everything's fine, it's wonderful. I think we really do need to warn people, and I think the way we do that is really good. Keep people on their toes.
But also, I think another thing to remember is we were doing a seminar in Melbourne during the week, and a lot of people were saying, I'm paying 3 point whatever and I'm paying in the fives, is interest rates are still cheap. So even if you're paying penalty interest and you're paying a bad interest rate, even if you're paying 5 or 6%, it's still a hell of a lot better than paying 7 or 8. So it's not the end of the world if you've got to pay that just to secure the property.
Yeah,
obviously you don't want to pay it long term, but it's still better than the old days. You might be paying 10%.
Well, 10% was a cheap loan, wasn't it?
But well, back then, I mean, there were times it was 15, 16, 17%. But right now, the world of mortgages has changed. I mean, 10, 15 years ago, Charles, people used to go and sit into the Commonwealth Bank, National Australia Bank, sit there in front of a manager, and basically the conversation would happen there in a branch at a suburb. Brokers now have changed the game completely, right? These mortgage brokers, and I actually see them more as being advisors now, because they don't have to sort of product push one product, right? They can sit there and say, like, we've got all these lenders. So I would probably say, getting back to answer the start of your question, align yourself with a great broker that is knows what he's doing. I know, Charles, you've got a fair number of brokers that operate in your business, so you know the difference between a good broker and a bad broker. So get yourself a great broker.
They call them a broker because sometimes that's how some of them leave you, Tom. Right? Yeah, I mean, you think, I really think...
He's really good with these words.
Oh, no, I think he said them before, though.
Well, maybe I have. One of the things that I've noticed with brokers and banks' situation, I think the banks have finally worked it out, that it's actually in their interest to have brokers rather than employees. Because, you're incentivising brokers, you're not paying them wages, they don't get anything from you unless they put a loan across the line.
Yeah.
And you imagine how many brokers there are in Australia and try and put those inside of banks as employees.
Yeah. No salaries,
I think the
no superannuation, no holiday pay.
Yeah. So probably a good question is a lot of people we find, they don't know where to find a good broker. Like, you go to the average broker, they say buy a home, pay it off. If they want someone slightly different, quite often the agents are pushing brokers these days and they're getting there. So should you trust a broker that's referred by an agent? Because again, most people's classic thing is then the broker's going to tell the agent how much you've got to spend. Should people be worried about that?
That is a dangerous one in that people believe that, but the reality is if the broker's got a relationship with the agent and they know that they can get good business from that agent, they're going to do everything right for that agent's clients because they don't want to lose that agent. I mean, it's just basic leveraging. That's all it is. We can talk about, they're all too closely aligned, but the truth is that agent is going to give that broker far more business if that broker does the right thing by the agent's clients.
Yep. So would you agree, Tom?
Regardless if they're Century 21 home loans or whatever franchise, the bottom line is Charles is right. Every broker has got relationships with agents. They call these people referrers, right? People live off referrers, and long-term referral relationships work when the customer wins. Because if you have a customer that actually is hurt in a transaction, that person never refers business ever again. So,
let alone real estate or brokerage,
correct. So they're all most brokers now have got relationships with accountants, with solicitors, with real estate agents.
And if you know what the property is worth in the first place, then it doesn't matter whether the agent knows what money you've got to spend anyway, because you say, look, I've got an unlimited budget, but I'm only going to pay what it's worth. Let's jump into your numbers, Charles. What's happening with the clearance rates?
It's actually very, very interesting around the countryside, Chris. The clearance rates on a national level were 69.1%. I mean, this time last year they were 74.9%, so it's not as great as this time last year, but the capital cities did okay. Melbourne did okay, 70.5%, but they had 923 auctions, so that's getting back up to the levels, but they still didn't perform as good as last year. And it's the same as Sydney. Sydney was at 74.3%, and they had 718 auctions. Again, they didn't perform as well as this time last year. There are only two capital cities that did better than this time last year, and that was Brisbane and Adelaide. So Perth has been one that's hovering, so it's starting to do a lot better, but Adelaide has been consistently better each week than this time last year, so something's happening down in that market, and that's been one of our picks along with Perth for this year to get some capital growth.
Sure. And what about homes advertised for sale?
Up again. Now, so this is 4 weeks in a row, and they were pretty solid increases too. They were right up in the high 4s and 5s at the start. This week, last week they were 1.23. This week they were up 1.36% over this time last week. So again, we've constantly had that increase, and as that starts to bolster up even more so, and then we talk about home loans and we talk about banks and issues associated with banks, it's going to make it a better opportunity for buyers. So the affordability issues should kick in because the prices are coming back a little bit in some areas, and there are fewer buyers out there and more stock. So it's going to be pretty good. pretty good to watch.
And what's happening with the yields? Because a lot of people are saying we've had all this growth, so rents are going up, but
yeah, look,
the yield's still down.
They went up over Christmas, and we expected that to happen. And of course, the yields will get better with the price changes, but nonetheless, the marketplace itself is still pretty level in that area. I'm expecting to see a downward trend in rents as those investment properties come through, as the apartments off the sale, off the plan start coming through in some of the capital cities. I really do expect those rents to change considerably.
And then finally, the vacancy rates.
Oh, really good again. Wow, if you look at the capital cities, Sydney's been climbing it a little bit. So Sydney came up at 2.34% from vacancy rate, but that's still very, very low. The Perth market was a 7.15, and that to me is great because that's consistently performing better. But the one that really came home this week, which actually was beaten by Sydney last week, was Melbourne at 0.62% vacancy rate. It doesn't get much better than that. So 3.37% vacancy rate over those three capital cities.
Now, Tom, obviously a bit of a changing market to last year. So when it comes to strategy, do you think people should change between, say, houses, units, residential, commercial, or getting into something else?
I think that every winner was a beginner, and I don't think that you should be looking at a commercial owner if you've got no real estate and say to yourself, you know, this person's smart, this guy's making a lot of money, I'm going to follow their strategy. What you probably haven't seen is what that person bought prior to that. What was that person's first purchase? So I think that you should accept that you've got to play the long game in real estate, and that means that potentially what you should be doing is maybe, and I'm only talking about what I did myself, entered with a unit, then a house, then a block of units, right? I haven't gone into commercial. I would say to myself that I'd probably get a lot better yields, I'd probably be a lot better than, but my risk factor, I'm that sort of person that just thinks to themselves, what if I don't have a tenant for 6 months? Now, the price that I pay as an investor is I'd get, you know, lower yields. But anyone that's watching, I would say that what you've got to do is look at where you're at right now. Don't look at where other people are at. So I would say go down that path. And I'd always, and I think the better question would be not what to buy, but where you buy. Don't go off watching some TV show, hearing about 25–30% potential growth being exploded in a, you know, mining town, right? Which I know that this is not what this show ever does. And I know, Chris, your strategy is sound, that you won't buy for a bargain price, but what you'll buy is a blue chip location, quality property. You know,
it's boring stuff.
Well, it is. You know, the commercial aspect of it. I've got commercial property, but as I've mentioned to you before, that's because I'm the tenant, and
you're highly skilled as well.
Well, I've got lucky.
That's debatable, but obviously you're in the business, and he's got a lot of money.
I can tell
you, I have not. Somebody else is holding it for me. The interesting thing I've found with commercial is in the last 12 months it's doubled in value for commercial stratas in Sydney. What I mean by that is that 10 years ago, when I started buying the floors that I bought to house Century 21 head offices across each capital city, the one I bought in Sydney 10 years ago sat there idle for quite some time, no movement at all. When the interest rates started to drop and tenants started to realise it's cheaper for them to own the floors than to rent them, they started buying, and they literally in the last 12 months from property that I had purchased, it went up double in that period of time. And that's what people see. They see the
headline.
They see the picture. Yeah, they don't, as you say, they don't see the whole movie.
Yeah.
They see that snapshot, and they go, "Oh, let's get in there." And it's dangerous. It's risky. You've got to give incentives for tenants. If you get a vacancy, you'll get a vacancy for 6 months, and you're gone.
Yeah.
It's like Tom Panos, the 10-year overnight success.
That's it.
Suddenly out there.
Yeah.
Anyway, coming up, Harry Dent's latest predictions for the Australian property market, and a reminder that you can actually get a free digital copy of my book, The F-less Empire. Just go to yourempire.com.au. Now, we're going to take a short break, but we'll be back soon.
You're watching Sky News Real Estate. Smart Investing.
Welcome back to Smart Investing. Well, Harry Dent, the demographer, said in 2012 that Australia was in a bubble and that Sydney and Melbourne were going to be hit the worst. In 2013, he said the same thing, followed by 2014 with the same thing yet again. He is back again, presumably with a new book, with a similar message. Is he finally right? Charles, what are your thoughts?
Well, I don't think we're going to see the crash that Harry Dent talks about all of these times. I'm sure,
as in the 30 or 40%?
Yeah, I'm sure we're going to see an adjustment, which we're seeing now. I just think there's far better lever controls, or what do they call them, on our interest rates and the way in which people are reading the RBA and the way in which APRA works. I think when I go back in the history of real estate, the controls they had going all that way back were very, very ordinary compared to what they do today. You know, releasing, we're already having a punt every 4 weeks, thereabouts, about what the interest rate's going to be like, whereas before it was just a big guessing game. So I don't think it's the same situation unless there's a major catastrophe and an overseas economy, because that's really where we're impacted. I don't see that at all, and I'm encouraging my children now, because they've got a bit more equity since the last boom, to start looking again, because it's time now to be able to make offers on properties and negotiate a fair price without being rushed into a purchase.
Now, as a generalisation, and obviously not picking on Harry, you've written a couple of books in your time.
Yeah.
If you wanted to sell millions of those books, do you think you could just say the market's all right, buy my book, or do you need to come out with something amazing that's going to hit all the headlines?
Oh, well, look, if I said the market's great, you know, my book's for sale, I'll tell you that it's going to crash, I don't think you'd look at it at all. And I think a headline is absolutely fantastic, and that's why we in real estate have headlines. I think they call it, what's the method they call it when we talk about advertising? The AIDA formula, the attention to getting interest.
Yes,
in the
you're
first
bringing
two
back
lines.
Advertising
101.
101.
Action.
101.
And you're on 3.02 or something.
Yeah, I'm on.
Yeah.
Again, you sell courses, Tom, or you teach real estate agent courses. Again, is basic marketing. If you want to get more people to come to your things, do you need to sell big headlines?
Absolutely, and I think if Harry Dent's book was called Chances Are That the Market Won't Go Up, but it might go down a few percentages, so watch out, he would not sell many books, right?
And you, with your training, I mean, you get right in people's faces and you let them know what's going on out there. You speak the language of the agent, and they feel what you're feeling, and that's why they flock to you in droves, because they know you're going to tell them what like.
And he's honest, and he uses all the four-letter words as well.
Instead of saying, hi, come and watch.
I've never used it on. I've never used
You've
them on.
never done it on
I've
TV.
never used them on TV, which shows I've got another quality, and that is discipline.
Okay. Well.
So, I guess the next question is in the average person's mind, they watch TV, they read the newspapers, some ex-person is an economist, and they believe them, they come out with big words and stuff like that, how does the consumer understand who to believe? Should they believe us on this show? Should they believe someone else? How do they do it?
I think you've got to really look what's happening in the street. I think the agents know what's happening in the street, and you can go up to a window display, and you can look into a window display, and you can see how the market's going just by looking into a window display. You see either a whole bunch of properties for sale, and the more faded the picture is, the longer it's been on the market, so you know the market's slow. You know, you don't need an economist to tell you the market's slow. If you go to an agent's window and it's got his soul stickers on there, you know you've missed the boat. And I think that's the way to look at it. There have been a couple of people out there that have suggested that they would sell their property and walk to Canberra or Mount Kosciuszko if the crash didn't happen. And anyway, of course, they had to sell their apartment and walk to. And these are very highly educated, very smart people, and maybe they just misread the market.
And look, it's tough because, Tom, there's more and more online tools now. Real estate's set up that you can buy it from overseas. You don't even have to look at the property. You can see all of these things. But how do people really understand what's in the market if they haven't got either themselves or someone else on the ground?
Okay, so I think that there's enough tools available. There's enough information, CoreLogic, realestate.com, relationships with real estate agents, driving around the streets, as Charles says, looking at sold-by stickers, looking at sales. You can basically become a registered valuer in 8 weeks now. Every person. You can have the lady that works at the school canteen can learn to become a registered valuer by just studying what's actually going on. And I would say it's very simple, Chris. Like Harry Dent, for instance. Like, if you followed his advice in 13, 14 and 15, you've lost a lot of money because you've been out of the market, right? And you may have sold and that property has gone up in many parts of Australia 30, 40%. So I think that one of the best things to do is look at the track record of the person that's telling you those things. I mean, how accurate were they, and why are they an expert? Are they self-appointed? Is this person an expert without a track record?
It's like a financial advisor. I tell a lot of people they want to use a financial advisor, and many of them need financial advisors. Before you do that, have a look at the financial advisor's balance sheet, personal balance sheet, before you take advice.
And if they don't share it and they're not open, why would you use them?
I mean,
Tom Panos, Charles Tarbey, thank you for joining us this evening. We'll see you again next week. Thanks for joining us at home. Now, you can always reach me with questions regarding your personal situation and we can narrate it on the show. Just send us an email to chris@yourempire.com.au. Until next time, I'm Chris Gray. Thanks for watching.
Information presented on Sky News Real Estate is general in nature. Viewers should seek their own professional advice before purchasing products or services. Sky News Real Estate may receive a fee for commercial arrangements with companies featured in this programming.